Right, let's get into the markets now. Asian stocks traded mixed today. This as investors continue to consider the impacts of forthcoming US tariffs. Regional markets were mostly muted, however, with no cues coming from the United States market from the day before, as that country was closed for business celebrating Memorial Day. In terms of the expected US open later today, futures numbers suggest that major indexes will open in positive territory. The Nikkei share average rose by 0.51%. The Hang Seng Index gained 0.43%, while the Shanghai Composite Index declined by 0.2%. Looking at the local indicators, we see that the all-share index is down 0.2% at 93,572 index points. The rand is trading at 17.88 against the US dollar, 20.29 vis-a-vis the euro, and 24.23 against the British pound. On the commodity front, we see that gold is trading at $3,295 an ounce, platinum at $1,076 an ounce, while Brent crude oil is at around $64.22 a barrel. All right, so of course there's been a lot going on in terms of the Donald Trump tariffs. They're on, they're off. Currently there's a moratorium, or at least a break on tariffs, but in about 70 days or so we're going to hopefully find out from President Trump what he's decided on those so-called reciprocal tariffs. So to discuss further, I'm joined by Devin Shute. He's the head of investments at the Robert Group. Thank you very much for joining us, Devin.
Great to be here, Nompu.
Good stuff. So, of course, the US market, which is a very pivotal market for everybody, was closed because of Memorial Day. As a result, everybody else is quite muted because people get their signals from the United States. As I mentioned, the tariff sort of story is always sort of at the background. What do you expect US markets to look like this afternoon? We see that the futures are suggesting that they'll open in positive territory. But when I read financial media, the reason for this that they state is that because Trump has delayed the tariffs on the EU, that's nothing to celebrate.
Yeah, I mean, we're living in crazy times, and uncertainty, as you said, is in the back of every investor's mind. And as a result, we're seeing the market trying to position itself ahead of what could this tariff policy mean, how it could be more concretely implemented. And the result is no one knows. And we're seeing that pervasive uncertainty. I would say that the strength coming through from US futures, and likely at their open today, is as a result of a stay of execution and possibly the optimism that there'll be more pragmatism that comes into those European tariffs. It remains to be seen. And, you know, while we've had an incredible recovery in financial markets across the globe, locally as well as offshore, since the initial bout of tariffs, there's definitely risk to the downside that we actually get permanent tariffs that are far higher than were before Liberation Day. And so as a result, you're seeing this kind of heightened volatility, and I think that's with us for a while to stay.
Indeed. This week, the South African Reserve Bank is going to make a call on interest rates. We see that the rand is firmer relative to major currencies. We know the US dollar is also somewhat weaker. And on top of that, the inflation number is well below the Reserve Bank's inflation target of 3 to 6%, even though we hear that there is talk of bringing that inflation target down. So that really suggests that we could get a cut, and it seems as though market players are also expecting. But what is the market actually saying, you know, the forward rate agreements? What do they suggest the Reserve Bank is going to do?
Yes, well, look, I think the consensus is for a cut potentially now in May, probably a split vote, and then at least one more 25 basis points cut later in the year. That's been what's forecast. My sense is that the Reserve Bank could do a lot more, because exactly what you said is that we're now sitting for, I think this is the 9th month that inflation is printed below the midpoint. Forecasts are that that's going to persist below the midpoint for another 8 months. So what we're seeing here is that we really don't have an inflation problem led by demand, which is what tighter monetary policy would do. You know, we've got petrol prices thankfully coming lower, but the South African consumer really needs a shot in the arm. And although monetary policy can't do the heavy lifting of getting growth going, it could definitely help in an environment where we're seeing the Reserve Bank cut our growth rates a lot lower. So there's no doubt it would help. And I think Odds on is that we may see a cut
Yeah.
later this week.
So I saw a statement out today from Harmony Gold. They have operations in Australia, and one of their subsidiaries there is going to be buying a copper outfit called Mac Copper for $1 billion US. It seems as though copper is all the rage. Everybody wants to get into copper. Just tell us your thoughts about that acquisition and how it sets Harmony up.
Yes, so copper, fantastic metal. Remember, it's a green metal, so it's used in everything renewable, and we've seen enormous demand for that coming through. So those assets are really sought after. We'll think back to where Billiton put in a bid for Anglo American, and that was really for those copper assets. So what Harmony is doing here is executing on their strategy to be a low-cost producer and diversifying away from just gold. So they have some copper assets. They're now wanting to add to that. It looks like a terrific asset also in Australia where the other assets are. My one concern I'd flag is that they're paying all in cash for that. There's no stock changing hands. So as a result, they are taking on some debt. I think the quantum of it they can handle. But I think overall, post this deal, the portfolio of metals that Harmony sits with is very desirable.
Yeah,
I think
and
the market
hopefully,
will like it.
if the gold price keeps on doing what it's doing, they'll be able to pay for that with no problem.
Correct.
Thank you so much, Devin, for your time and your insights there. That was Devin Shute. He is the head of investments at the Robert Group.